Thank you so much for joining us on the Dwelling Show. I'm your host, Ola Dantes. I've got an awesome guest with us today. I've got Judge Abreu with us. Hey, Judge, how you doing?
Doing good. How you doing today?
Doing fantastic. So glad to have you on the show. Obviously, we've met once. I think I came to one of your acquisitions, and obviously we see a lot on the mastermind that we're on together, and obviously on social media, on LinkedIn, and things like that. So really nice to have you to share your story.
Same here, man. I'm excited.
Yeah, cool. So, let's kind of jump right into it. Just tell us a little bit more about who you are, what you've been doing, and kind of what you're doing lately, actually.
Okay. Yeah. So I'll try to rush you through my background so I can get into what's going on lately. I started in single family investments about 15 years ago. Quit my W-2, started doing full-time real estate, opened a construction company about 11 years ago to scale the then single family investments. Um, Learned a lot in doing so. I was able to scale, and we were averaging maybe 45 flips a year, plus the wholesales. And then we started doing some new development as well, some smaller multifamily. Um, to about 4 years ago is when I was introduced to syndications and large multifamily properties. And once I was introduced to that, I fell in love with it. I knew that's what I wanted to do. That's what I wanted to focus on. Uh, Made some changes within my companies, and now that's pretty much what I'm focusing on the investment side as well as the construction company. Um, we do our own construction work and also work with investor clients as well. And should be right at about 2,000 doors after this month, and wanting to get to 10,000 as soon as possible.
Yeah, nice. Thank you so much for sharing that. I was just kind of taking some notes. So I definitely want to go a little bit back. So you you first and foremost you go into real estate, then you quit your job, right? So at what point did you actually quit your job? So literally at what point in your real estate strategy was you on the single family side? And after that, when you did quit your job, did you get to that promised land that everybody wants to get to where it's like you don't do anything, you just, chilling on the beach? How was that like for you?
So, yeah, I'll dig in a little deeper there. I studied to be an electrical engineer. While I was studying, I knew I didn't want to do that. I just I got my degree, but at the same time, I did some research and I knew that I wanted to go into real estate investing. At the same time, I got my realtor's license, I got my mortgage broker's license. I started doing some of those things, but always keeping in mind that I wanted to be an investor. So I finally hired a coach to teach me how to do the real estate investing. Um, and then that's really what excelled that next step to where I finally started doing deals on a constant basis, where I felt comfortable enough to where the time I was spending at work, I was losing money because I could be spending time in the investment side and making more than I was at my job. Um, and that's what made me finally quit and start doing real estate full time.
And this was when you were still doing your flips, right? With kind of flipping houses then.
Yeah, yeah, I did. I don't remember exactly how many deals before. Um, it wasn't more than a year. I mean, it took maybe 6 months or so of doing um, single family wholesales and flips back then um, to turn in my resignation.
Yeah, so a lot of people kind of ask this question, and this has been a pretty big debate in just the real estate investing world. Like, some people say burn the boats, others say, basically, put an anchor on the boat just in case, there's a massive monster on the island and you need to kind of run. What are your thoughts been that you've actually done so? You've quit your job and you focus on real estate. What are your thoughts on that, on the two philosophies, I guess?
You know, I took it to the point where I was literally doing as much as I possibly could, like taking care of my work, and then any time outside of that, I mean, I was hustling. You know, I had that side hustle you call, right? Until that side hustle started pressing and pressing, and um, I was at my W-2 job, you know, taking calls constantly for the investment side, and that kind of pushed me to make the next step. Now, I'll give you an example. You know, that was maybe 2006 or so. I can't remember exactly what year. And then we had the crash 2008. So, I mean, you know, I had a couple years of doing awesome. And back then I was in South Florida. Now I live in Dallas, Texas. Um, so South Florida was one of the hardest hit places. Prices were super inflated. Um, and at that point, I needed to decide, okay, what am I gonna do? Am I gonna go back and be an engineer, or am I gonna weather this storm and figure it out and be flexible? And that's what I decided to do. You know, that's what made me move to Dallas, because I looked at different markets, um, and Dallas was one of the most stable ones at that time. So, you know, it depends. My philosophy now that I've gone through all that, I would say, look, if you've got a good W-2 job, stay there as long as you possibly can until it doesn't make sense. You know, until you're making more money doing whatever that side hustle is, then make that change.
Yeah, actually, that is my advice, actually, because a lot of folks that want to jump into real estate don't really understand like the amount of patience and the amount of grit that goes into just finding one deal, right? Like, I mean, you know this when similar markets, when you're in Texas, and it's just, if you have a, like you said, a good paying job. Actually, there's a data that came out and said people had a 33% chance of succeeding in their side hustle if they kept their day job, right? Which makes absolute sense. So yeah, totally agree on that. Another thing that you did was you found a coach and you got a coach, right? So mentors, coaches, masterminds, just basically having that knowledge, right? First and foremost, how do you find a good coach, and just what are your thoughts on mentoring and having a coach?
You know, things change. You know, back then it was pretty easy to find a coach. There wasn't so many. You know, there was only a few, and what I did was just look at the track record and um, call up some references and whatnot. But you know, now I think it's a little tougher. You know, there's so many coaches, and you got to kind of weed through. You know, who are the coaches that did one deal and now they're a coach. You know, which ones are really just coaches and haven't even done the business. So what I kind of say, like, if you're going to do this now, I almost think it's better to find where you can add value to somebody that's doing what you want to do, not necessarily a coach, um, and add value to them, and kind of learn that way. You know, even if you got to offer if you got to work for free, whatever you got to do, you know, get your foot in that door and learn that way.
Uh, Yeah, definitely. I totally agree as well. I think a lot of people just kind of think if I get a coach, then I would be like the coach. even if you're paying for the coach, right? I mean, there's just a lot of things that goes in between meeting a coach, paying for a coach, or even helping a coach before getting to, kind of the same level that they're at. So I think people forget that too. I do want to touch on something. I mean, you were doing 45 flips a year. That is a lot of flips. My question is this though: for somebody that's done 45 flips a year and now doing multifamily syndication and, you know, construction management on multifamily assets, which do you prefer more and why?
Oh man, multifamily, so much more. It's fun. It's fun when you get to a certain point. When I like to go all out when I do things, and um, I just wasn't satisfied doing a few flips here and there. Um, just a lot of transactions, between the single family. A lot of transactions, not, if you're doing fix and flips, you don't have the cash flow. So answer your question, multifamily, 1,000%.
Okay, so kind of going to piggyback on that a little bit. There are some barriers that you have to jump, right? If you're coming from, single family to multifamily, right? That I feel like we syndicators don't talk enough about, right? You need a guarantor, someone to sign on the loan. You need, if your balance sheet isn't as large as it wouldn't be if you don't have any experience in it, right? So like, what were some of the barriers that somebody doing really well in a flipping business trying to get into multifamily syndication, what are the barriers that you faced and how did you overcome those?
Yeah. One of the biggest things is multifamily isn't single family. You can possibly quit your job and start doing single family and start making some money. Possibly, if you've got your ducks in a row. Um, Multifamily, not so much, man. It's you can be waiting a long period of time before you get your first acquisition or your second acquisition, or definitely you're exiting of a property or a deal. Um, so there could be these long gaps where you're not making any money. Um, so you definitely have to take that into account. It's not till you really get it going um, that you start seeing the benefits of multifamily. That
Yes.
makes
So
sense.
yeah, yeah, no, sure. I see that, you've obviously scaled to about 2,000 units. You said you're coming up to 2,000 units. The target is 10,000. And I see that you guys are vertically integrated. You've got basically, all your business functions in-house. What was the rationale for you guys, going vertically integrated? And, how does that fit into kind of your long-term plan into having, 10,000 units under management?
Yeah, the more doors you get under management, the more you can bring in house. The more it makes sense to bring things in house. The more you have in house, the more control you have. But every aspect you decide to bring in house, whether it's construction, property management, whatever else, it's in a sense its own business. So you've got to be able to manage that. You've got to be able to hire the right individuals. Um, there's no way one single person can run all those businesses, without the right people in place. Um, you can't be the day-to-day operation manager, whatever you want to call it, of each one of those. So the reason I want to get to 10,000 is to bring most things in-house and continue to grow that portfolio, have it producing and being as strong as it possibly can, without relying on third-party companies. And um, yeah.
So let's take a trip into the future, right? So let's say in the nearest future, yeah, you wake up one day, you've got 10,000 units, AUM. What do you think you'd want to do next?
20,000.
That was an easy answer. That's funny. Fair enough. Okay. So basically, as big as you can get, that's kind of the idea.
Basically, bringing on the right team members as we grow. But yeah, I don't plan on slowing down.
Awesome. So, what I wanted to touch on is, so you also not only kind of manage your own, value add your rehabs, you also now, I think it's JNT, right? You actually help other investors, with kind of construction. Even are you guys into ground up now?
We are, yeah. We've done it for years, but end of last year we actually merged with another construction company that's their specialty. So yes, we definitely do that.
Awesome. Awesome. All right. So before we kind of go into the quick runs, I want us to talk about, a case study, like maybe a deal that you really liked. It doesn't have to be the deal that you made the most money. Maybe there was just a really cool story about it. So just give us a case study of a deal that you really like.
Um, we got one 216 unit that we purchased in Oklahoma. Not the uh, craziest looking numbers or the sexiest looking economy. It's a smaller city in Oklahoma, Loudon, Oklahoma, but we've been able to execute the business plan there, and it's going great as far as occupancy, collections, projections compared to actuals. So it's been one of those properties that it's been a little surprising. Not that we thought we were going to do bad with it. It's yeah, it's doing
Yeah.
better than we thought.
Right. Sometimes you just don't know until you actually start, operationalizing your business plan, right? Essentially. Awesome. Well, we definitely running into the quick rounds. These are going to be quick questions, quick answers. You ready, sir?
Hopefully, it'll be quick answers.
All right. First question. What makes you judge unique? What is that differentiating factor that separates you from the next guy or the next girl?
Um, specific to multifamily, I think my construction experience definitely helps me stand out, and then that fact that I want to continue to grow and that I'm determined and relentless.
Awesome. Second question. What was the last book that you read, and what was the one thing that you picked out or learned from that book?
The what was the last one? What's it called? Four disciplines. See, I told you these answers wouldn't be that quick. Oh man,
It's
I
okay.
didn't read too many books. Shoot, I can't even find my Audible. The four disciplines of execution. And,
Awesome.
and what I learned from that, it's similar concept to EOS. I don't know if you're familiar with that traction.
Yes.
It's like a slimmer version of that, which is all about having a business operating system and just having everybody on the same page and having weekly meetings and KPIs that are followed, scorecards so that everybody can see their KPIs and where they're at and how they're hitting their goals. So that's something I've been implementing for the past year or so within my companies, and that's one of those things that helps. If we continue to bring things in house.
Makes sense. Makes sense. Final question. You're obviously running, your company. You're running all the syndications. You're a busy man. You've got a lot going. Obviously, also, spending time with family. You've got everything going on. What do you do for fun?
um, Not a lot, man. I mean, I guess now with COVID for sure, but usually basketball. I love playing basketball. I love the beach. So whenever I can take a vacation, and love spending time with my family. I mean, just taking the kids to their sporting events is fun.
Yeah, no, definitely. Definitely. So if there's somebody listening to us thinking, oh, wow, I really want to learn a little bit more, maybe they're in the Texas market or maybe anywhere in the country, where's the best place people can reach out, get to know you more?
Yeah, so we've got social media wise, we're on every platform. If you search my name on at least the three major ones, Facebook, Instagram, and LinkedIn. If you search my name or if you search my company name, Elevate, um, you'll find me. And then we've really been updating our website, elevatecig.com, stands for Commercial Investment Group. So elevatecig.com. We've been kind of putting all the content together on our site, so it's easy to find. And if they want to shoot me, if your listeners want to shoot me an email as well, I can send them some free content. I've got a due diligence checklist, questions to ask, a couple other items. And my email is my first name, so George or Jorge, it's Jorge at elevatecig.com.
George, thank you so much. Really, really appreciate that. Thank you, thank you, thank you.
Thank you, man.